Back to the CEOs Summit 2024. Remember, this year's theme is Leaders' Perspective, Sustainable Growth for the Global Insurance Industry. Let's cross over live and listen.
Asking one critical question, someone having 5 or 10 cars, why should he continue to pay for all the 10 cars motor comprehensive when actually he drives one car at a time? Because I see that in Uganda, and I know Kenyans are more wealthy than Uganda. I imagine some of you might even be having 20 cars parked there. You need these cars to have insurance, but not all of them will be exposed at the same time. So can I pay for only that time I'm going to be using this facility? And when I park it, its insurance will cease. But you want me to pay for the full year, and I also don't have to waste that money. Next slide, please. Data management and cybersecurity. Definitely, as insurance underwriters and players, we must emphasize this. We must make sure that as we do, many medical products are online, and many other products, people are doing it, but we must ensure that we employ those, are they called whatever hackers? They are those hackers who are allowed, and we employ them so that they check the system, how safe it is, in order for you to continue using it, and also people not to penetrate into your system and they give you, they manipulate your figures. Then the other one is the strategic partnerships. We must talk of strategic partnerships. In Uganda, we do encourage mergers and acquisitions. We are not afraid. If any company comes and wants to merge with any company in Uganda, we do support it. And the regulator will always give you all the support you need. Because we know if you are much stronger, it means the retention will be higher. And when you retain higher, you can say this company came from Kenya, when say Kenya is from Kenya. No. Kenya Uganda is Kenya Uganda. It is not Kenya Kenya. No, it is Kenya Uganda. And when I'm putting to task, when something happens in Uganda, I'll not come for the group, the chairperson here. I'll go for George Okosa and Nsubu Gatadeo here. So that's what we do. And this is intended really to ensure that let us all be as open as possible to encourage stronger companies in our midst, companies which come with new ideas in our midst, and we can all move to the next level. The next slide. Then we have also to talk of risk management and resilience. At all times, when we are looking at what we do, we must ensure that we are clear on risk management. I know to some this is a new concept, and to some people they were saying that they don't have risk managers, they don't have risk officers and things like that, but it is critical. We need it if we are to move. Then the resilience, let's not talk of companies which are not there as a going concern. For every entity, let's look at it as a going concern, a company which must outgrow you and stay much longer than you. Then the sustainability and social responsibility. Ladies and gentlemen, I cannot emphasize the social responsibility much more, because we know that when we get the money, the premiums we collect it from people. And when they get, they are building emergency ward or or whatever cancer ward or whatever they are doing. You don't want you as insurance underwriters to participate in what they do, then you are also not appreciative. We must also be seen that we don't only go to people to pick their premiums, but we go there to support the Harambes, which are there, which are intended to ensure that situations are better for everybody. Next, please. This is, in conclusion, regulation demands that we have increased will and we ensure that we talk to the changing landscape. And the regulators, including myself, we must remain committed to strong, adaptive regulation, which safeguards the interests of the stakeholders. However, we must foster expansion or development. And all players must be proactive. Let's not wait until the minimum capital is changed that you start panicking. Let's not wait until the regulator tells you to employ a resident actuary in your company, that now you start panicking, the ones we have are not enough, and things like that. When Ezekiel there he was waiting to see who are there waiting to get the services. Let's be proactive. And I know it is not easy, but no two way about it. May I end with a quotation, which is on the next page, please, which is a Japanese proverb, which says, the bamboo that bends is stronger than the oak that resists. Ladies and gentlemen, we must all bend, move, because if we resist, we know where we will end. I thank you for listening to me.
Sure, thank you, Commissioner. Trust me, Mr. Kadunabi, we know him for no-nonsense control regarding market, and you can be assured we couldn't want to interrupt him. That might be the longest presentation over the next 2 days, from today and tomorrow. So we request, again, whoever follows after that to kindly note the timelines. Our timings are a maximum of 10 minutes, but for Uganda, Mr. Kadunabi is Mr. Kadunabi. And we appreciate you. We appreciate you. We appreciate you. So again, we may want to just summarize the key highlights of his presentation and Mr. Kalai's presentation. I think we were very clear that we really need to comply. It is not optional. It is not optional. And for that, again, we have some key notable items coming out of this presentation. We had the issue of ESG. We will learn more about it tomorrow from my friend Patrick Muturi there. He might take us through the financial disclosures. You have a new financial standard coming up on ESG, that is IFRS S1 and S2. But I'm sure we'll learn about that tomorrow. Mr. Kalai insisted so much on collaboration, partnerships, not to worry about it. There are issues that come with now this regulation, that is data privacy, customer protection, and that balance, striking that balance between protecting capital, protecting shareholders' solvency, and again, also ensuring that we are doing proactive, not reactive regulation that should be adaptive. There was the issue of innovation and also the issue of harmonizing regulation. And we have really appreciated the support given to us in Uganda. And the understanding that the regulators have in the EAC and of course the wider African region. And for that, Mr. Regulator, we might be coming to Uganda very soon with a solution that we've been working on for the EAC. So we have met all the requirements in Kenya. We might be going live soon, but we want your support in Uganda. And we are also glad that among us too, we have one of the brokers. We've been working on a green energy solution, and we are happy to say we have all approvals, and we can deploy it anytime soon. You hinted on strategic partnerships. This is the only way out, and the issue of resilience and sustainability. But most importantly, your message that we must stay ahead of regulation. And that is the proactivity of now this topic. And with those few remarks, allow me to recognize my panelists. So again, we might make some changes in the program that we shared with you. So we are going to assume the regulator may not want to come back as a panelist. He is done. And we also want to assume, Mr. Kalai, you are also done. So we are going to just go through the profiles of other other panelists. So as a highlight, maybe the background of our regulator in Uganda, Mr. Kadunabi is a fellow and a certified professional of Australian and New Zealand Institute of Insurance and Finance with over 20 years of experience. He's also now the former president of AIO, that is from 2017-2018, and a respected member of Ugandan society, as a board member in many companies, private, and also a former parliamentarian in Uganda for 2 terms. And he also chaired Parliamentary Committee on National Economy and Board Trustees of Parliamentary Pensions Scheme in Uganda. He has master's degree in economic policy, planning, and a Bachelor of Science in economics from Makerere University, again in Uganda. Our own regulator, as a summary, again, he's the CEO of Kenya Regulatory Authority with over 2 decades of experience and holds an MBA from ISAMI and is also an associate of Life Management Institute in the US. He's also a member of a Chartered Insurance Institute of UK, and he was also the former head of Human Resource Capital Development and Administration in IRA. Among the other now members present here, panelists present, and when I go through your profile, you can kindly come here. We have Ms. Nancy Muhoya. Ms. Nancy Muhoya is the CEO of Ernst & Young in Kenya. I think the youngest CEO they have ever produced. So Nancy, kindly come. She's a certified public accountant with over 20 years of experience. Okay, kindly. And also holds an MBA from University of Nairobi and also Bachelor of Commerce from University of Nairobi. Okay. She was voted top 40 other 40 women in Kenya and also top 100 women CEOs in Africa. We want to invite Benjamin Adea from Gulf Bank. And he has extensive experience in operations and compliance, gained from a long distinguished career in banking, stretching back for more than 20 years. So welcome, Benson. And he holds a BSc in electrical engineering from University of Nairobi. That is Benjamin Adea. We will have the DG, Director General, Mr. Albert Mwenda, representing the PS, National Treasury. So our boss, Dr. Chris Kiptoo, is the current Permanent Secretary in the Ministry of Finance in Kenya. He's now immediate Principal Secretary of the State Department for Trade in the Ministry of Industry, Trade and Cooperatives since 2015. He holds a PhD in International Microeconomics, Finance specialization from University of Nairobi. So welcome, DG. Then we have the Data Commissioner, And again, this is aligned to what the Ugandan regulator was highlighting on the data privacy. So we thought it wise to invite the data commissioner in Kenya. So we have Immaculate Kasaiti, kindly come. She is the first data commissioner in Kenya. She's the first data commissioner in Kenya. And she has over 12 years work experience in public sector, managing complex projects in governance, training, compliance, and strategy. She's also an advocate of the High Court and holds an MBA from USIU. Okay. Then we have Hatno Dungi, and I wish you can start working. So Hathnel is quite an achiever. He's the Chief Data Officer of the APSA Group, and recently got the title of the Africa Data Personality of the Year, an award he won. Then he also won the top 100 global innovators in data analytics. So welcome, Adnan. Okay, and I think now we have our panels, and because a lot has been covered, we can agree these are experts in their areas, so we may not want to ask them questions. What we may want them to do is to contextualize the presentations, align them to their areas of specialization, and now give us more light as to how their areas of specialization relate to the presentation. So we want them to just spend 5 minutes maximum trying to just expound on what has been presented by the two regulators. So we can start with you, Nancy. So can you go ahead?
Let me see if this works. All right, indeed, Dr. Singa. Thank you very much, and good afternoon, everyone. Indeed, we have had a very busy morning with very important topics that were discussed by the presenters before us. Two things that came to mind, two words, that is. For me, it's about two T's. And what were the two T's that were quite profound? The number one T was trust, and the number two T was transparency. All right? So this is the context of insurance industry, the industry that we are all representing here. In my 21 years of working the professional services industry, specifically EY, or some of you know us as Ernst & Young, I have worked with the insurance sector, I've worked with insurance companies, and I deeply understand the struggles that the insurance sector is going through. I've also worked with other industries, like financial services industries, manufacturing, mining, and others. And I can tell you, while all industries are complex, I do think that the insurance industry is extremely complex. And I speak as a financial reporting person. I speak as a professional services person. So obviously, I'm not an underwriter, right? I'm a service provider. So I speak in that context. In the context of providing services to the insurance industry, trust for us is a key aspect. It's actually the core of everything that we do every day when we leave our homes. Without trust, nothing moves. Without trust, even at personal level, you would not have the family that you have today. Without trust, that life insurance cover that you have, you wouldn't have it. Without trust, perhaps your motor vehicles would be insured by a different insurance company. Do you believe me? Do you agree with that? Can I hear a yes? Perfect. If that is the case, we understand the why. And that brings me to the second T, transparency. All right? It brings me, and that word transparency was quite common. The CS mentioned it. The Commissioner Uganda mentioned it. Everybody who talked before me spoke about trust. So we do clearly in our mind intellectually understand the why, and the why we converge here. But how about the what? What's the what? Right? For me, and in line with the topic that I was assigned as I prepared, I thought about the what. And I thought about risk-based capital. But more importantly, I thought about sustainable solvency. But let's talk about risk-based capital. Obviously, all insurance companies have got a minimum capital requirement that they must have. And I guess the exam question here is to ensure that there will be going concern. Again, that's not a new word. You're not hearing it from me for today. You've heard it before today. You've heard it even earlier before my presentation. Insurance companies must be going concern. They must be able to meet their future obligations, not just the next 12 months, but for the foreseeable, for the many, many, many years. We are talking about covers that perhaps extend beyond 12 months, all right, as an example. But that's a challenge. How do we ensure that insurance companies remain those going concerns? I do know, not just me, but all of us in the room, you could have had insurance companies that have gone under, right? It's horrifying. It is. When you think about the stakeholders of those insurance companies, whether they are the employees that they feed every day, the livelihoods that they stand for, whether they are the policy holders who have trusted them with their money, whether it is the investors who have got shares in those insurance companies, and then you wake up one day and find on the headlines, you find this and this has gone down. It's under receivership, right? And of course, the news reporters know how to best report this news. So what's our role? So we really must deeply understand how then to value those policies. Are those policies well valued such that they have taken into account all possible risks? Risk of operational risks, market risks. You heard them in the morning. I don't need to mention them. But beyond minimum capital, beyond risk-based capital that seeks to ensure that insurance companies' risks or policies are commensurate to the risks exposure. What's there beyond that? Beyond there is sustainable solvency. But what's sustainable solvency? Again, quite complex. Complex in the context that we intellectually understand what sustainable goals are. We know. But how do we implement them? How do we incorporate them in the underwriting decisions, in the investment decisions? How can that be done? Quite a bit of work there. But let me just point a few. Pointing a few of these, obviously, there is need to improve sustainability reporting. And this again goes back to transparency. So the disclosures around sustainability reporting is one of them. Because this actually puts insurers, underwriters, of course, under pressure. And it's an expectation by consumers, remember that. But most importantly, and this was mentioned earlier on, is the ESG integration. Incorporating an ESG strategy in the course of investment decisions is critical. But more importantly, is incorporating climate risks in the RBC computations. And I did mention risk-based capital computations. But of course, they are much more than that. Dr. Achille, I can go on and on and on. But shall I just conclude now? Allow me to conclude and say, this is a topic that we must all be alive to. Increasingly, we see insurance companies coming up with innovative products. I want to applaud them. I want to applaud those organizations also who have started a journey to net zero, because it's the right thing to do. In the context of sustainable solvency for the insurance industry. And of course, I want to encourage the innovative decisions, the innovative initiatives. They must go on. We must think of things that have never been thought, right? We must be ahead of everybody else. Please, can we all work together? Whether it's professional services, whether the regulators across board, the insurance companies, can we all this come together? Can we ensure that these sessions for these 3 days do not end here? Rather, we take them into action and implement them. I want to end my 5 minutes with that, Dr. Achika. Thanks.
Thank you, Nancy. I think we can go to the next panelist, but let us kindly limit this to 5 minutes. Okay.
You can hear me without bending down. Can you hear me? Okay. Thank you, Dr. Washinga, and thank you for inviting us for this fantastic forum, summit, where there are industry leaders. I think, let me start off and Dr. Washinga, we had a session just briefly before he came here, and I thought I was going to be the last person. And the reason why I say that was I'm usually told in meetings by my CEO that, Ben, we've given you 5 minutes and you're going to take 15. I promise you I'm not going to do that. I'll take 5 minutes. So just a couple of things, and thank you once again. As Dr. Washinga introduced me, my name is Ben Adair, and usually I'm a perfectionist of detail. I just noticed that there's an N between my name A and D. That N is not there, it's Adair. And yeah, as he said, I've basically been in this compliance world for some time. I've been in the banking industry for 30 years, out of which in 3 different banks. I'm right now the Chief Risk Officer at Gulf African Bank, where I've been for the last 6 years. So compliance is my passion. As Chief Risk Officer, I oversee compliance, risk, and information security. So let me just start off by indicating and thanking both Mr. Kalai Muse and also Mr., I hope I pronounce it properly, Mr. Alhaj Kadunabi, because both your presentations are presentations that if, God forbid, you couldn't make that presentation and you're outside there, I would have picked it up and I would have actually done that whole presentation. It touches on it actually touches on all the elements in terms of risk. And those risks that you mentioned here do not only touch the insurance industry, they also touch the banking industry, where I come from. So I'll kick off with what Mr. Washinga asked. At the beginning, even before the CS came, you said, how do you balance compliance with doing business? And I think that's fundamental. And I think the way that we should look at this from my experience, compliance were initially seen to be policemen. They are initially seen to be showstoppers. But anybody who's practicing compliance in that manner is actually doing the wrong job. Is doing a disservice to the organization that they're working in. So compliance laws and regulations and organizational policies should never be seen as an impediment to doing business. If anything, it should be taken as a competitive advantage in that organization doing the right thing and actually delivering both its business objectives and delivering also to the customer, but within an ethical manner and doing things in the right manner. So that's the initial part. I mean, practically, is this successful in the places I've worked? It's successful. Right now, in Gulf African Bank, collectively, it's part of our culture, and we actually work collectively in making compliance a competitive advantage. If you go to a compliance officer, and the first answer is no, that's wrong if there's any compliance officer here. The first answer is how? How can I help you? That should be the first answer. And then from there, you look at a solution. Right now, the only thing I can tell you I cannot do for you in the bank is if you're a sanctioned entity. That's black and white. I can't deal with you. Osama bin Laden, rest in peace, passed away. We brought in somebody, you're sanctioned. So I couldn't deal with that. So just segueing into 3 areas that were mentioned. And one of them was in terms of, I thought our data commissioner, Commissioner Immaculate, was going to talk before me so that I could actually segue. So but I'll pick up from an industry perspective here. In terms of data protection being used as a catalyst for innovation. I mean, people hear data protection in Kenya, and we're just discussing it, and everybody just jumps up. It's a flavor right now. Any new regulation that comes in, there's a flavor and there's some anxiety as and when you understand that regulation. But the key thing is how you implement it. And one of the things that I always encourage people, I mentioned that to the initial speaker, to Mr. Kalai Muse, that the key thing that I've learned in my career is being in continuous conversation with my regulator. I do not fear asking my regulator questions. And if the regulator discovers that by me asking the question I'm doing something wrong, it's a conversation, because that's why I went to the regulator. And as such, you find that for me, I say, can it be used as a catalyst for innovation? Yes, because it prompts most organizations to look at how they protect personal identifiable information and data changes so as to remain compliant. It should not be seen as a limitation to business objectives. Organizations, the insurance industry, should look at ways to meet their business objectives while remaining compliant, hence innovation. Simple thing, many of us are used to using Excel spreadsheets. So a customer calls you, you've got all the customers' names on an Excel spreadsheet. Now, that's exposing you. Why don't you look at digitization? Whereby, if you're looking for customers' information, it's a specific customer's information that you're actually pulling out without exposing everything else. That's just an example. I think the second thing that I can look at is, how can compliance serve as a catalyst in terms of innovation? That's, again, I pick up from what was indicated and just being cognizant of time. And for me, I look at it in terms of the way that you can look at it as a catalyst for innovation within the industry, while also strengthening your consumer protection, is basically through enhanced trust and reputation. It's basically through the provision of information in a transparent manner. Just treating your customers fairly. Because at the end of the day, let's not lie to us, anybody else. The guys who pay our salaries are those customers. And then talk about regulatory sandboxes. And that's something I would like to challenge the regulators. I talked to Mr. Muse. You see, regulatory sandboxes is something very novel, but it's something very, very powerful that we should actually be adapting in terms of working with the regulators and conducting these tests in an environment that is in a controlled environment with the regulator as we test something that we're bringing up. Finally, because I'm cognizant of time, Dr. Washinga's indicated that we're allowed to digress from what was indicated, but I don't think I'll be digressing because it's not part of what I was told to talk about. But cybersecurity. My request and what I'd like to urge all the industry leaders here is, please, if you need to invest in cybersecurity, please do it now. You'll regret at a later stage if you don't invest in cybersecurity. And insider threats, any type of threats, these cyber guys they're actually trying to access data that they should not have access to. Work on things, Mr. Al-Hajj, I think that's the easiest way to say it. You talked about those hackers. Those are the ethical hackers that you actually employ. So you bring those ethical hackers, do continuous exercises. We do it in Gulf African Bank. Every other week or every other 2 weeks, there's some phishing that we do. And we actually do a data. And if we find you fishy, if you've been fished, we actually train you. If you've been fished twice, we continue training you. But if you fished twice, we start having a conversation. So I think that's something that we need to look at again. But the final thing, I cannot live here as a compliance officer in this industry. It touches on insurance level without talking about money laundering. That's a key area that we all need to look at. Last week I attended a forum, which was the second conference that involved money laundering reporting officers, of which I also represent Gulf African Bank as a money laundering reporting officer. And one of the things, the insurance industry was there, capital markets was there, circles were there, everybody was there. And one of the things we need to look at is, again, money laundering, again, does not stop your business. I think, Mr. Al-Hajj, I think you're the one who talked about, you talked about risk-based. All this is risk-based. So it's not one size fits all. Look at your business, look at your customers, understand who your customers are, understand the services you're offering to them, understand the businesses that you offer, and then from there apply a risk-based approach. And finally, at the end of the day, do not make it look like every time the customer is coming to you that you're trying to know the customer for the first time. You're in the wrong place. So with those few remarks, I hope I've not passed 5 minutes. Thank you very much, Dr. Washinga. I can talk about this the whole day. Thank you very much.
Thank you. And because you don't want to lose that thought process on data, I feel we may want to go to the data commissioner. So welcome, Madam Immaculate. And And kindly, I think if you hear me clearing my throat, you know you have cleared past the time allocation. Okay. So kindly go ahead, but stick to 5 minutes. Kindly.
It's hard to stick to 5 minutes. If there was a timer here, I would easily tell. But anyway, I'll try my best. Thank you, Daktari. Thank you for inviting us here as a panel to contribute to this inaugural summit for CEOs, and to your board, and for the different delegates who are in the room from Zambia, Cote d'Ivoire, Uganda, and Kenya, and also those who spoke before us, the regulators from IRA, and also from the Uganda IRA. And just speaking, because we're supposed to pick on some of the things they spoke about, the issue around evolving technology came out very strongly, and the issue around ESG, which will be spoken about tomorrow, the issue around collaboration, and the issue around cross-border compliance. Just picking those and trying to infuse them to my conversation. Who are we as a commission? And we are the Data Protection Commission. The mandate is under the Constitution of Kenya, borders on privacy. The time has come to hold us accountable as people in this industry and different industries to basically touch on the issue around trust, that you can't use customers' information without taking into account what the trust issues are. But for us, from where we sit in terms of what are the challenges we see in the industry, and maybe not just limited to the insurance industry. I think one is compliance, which Benjamin has spoken to, and compliance should always be seen as a competitive advantage, like he has said. We have also seen a bit of resistance. There's pushback because people feel there's too much being asked out of them. We've also seen an issue about cross-border transfer. It's spoken about by other people. When you're moving your information from one country to another, people don't know why, and there is the requirements. There are also limitations in terms of resource allocation. We've seen at board level, few companies are giving adequate resources in terms of human resources, in terms of financial resources. At an African context, because we are having different African countries here, there is no harmonization of data protection regulatory framework. We've seen that as an effect. Al-Hajj did speak to it. You have to keep changing laws. It's the same for data protection. There's no harmonized framework across Africa. So it's challenging because if you're a regulator, if you're an insurance company in Kenya, you have to comply with different set of regulation in Uganda, Tanzania, and that can be a challenge. And of course, the issue around governance. But for us, having said those as challenges, and you as CEOs, what would be your quick intervention in this conference? What do you think about? Of course, for us, and I know it's the same in the different jurisdictions in the room, your starting point is really registration. You need to start in terms of compliance to register as a data controller or data processor, because as insurance companies, you collect a lot of personal information, which is sensitive. It starts you the compliance journey. The other one I would suggest is that the board level, please allocate enough resources, or even a startup, just put in I would say a few shillings, money to start the process, and also get a data protection officer. That is very important. And then do an audit in the organization, because you also want to ask yourself, what kind of data are we collecting? Where is it stored? What risks are we facing? We are doing cross-border transfers. Do we have undertaken data protection impact assessment, and also start doing your policy documents in as far as data protection is concerned. Conduct training for your staff, and also create awareness for your staff. And also, some of the concerns that are raised normally with us is, have you conducted a data protection impact assessment? Have you reported any breach if that has happened? So for me, those are key things that you in the insurance industry that you need to think about. And in conclusion, as an office, we have an open door policy. The same for my colleagues, whether it's Madam Stella. Whether it's Madam Stella in Uganda, whether it's Ricardo in Zambia, whether it's my colleague in Cote d'Ivoire, all data protection authorities are willing to work with you this journey, because everybody, it's a new area, everyone is trying to learn about it, we're trying to improve the ecosystem. And with those very many remarks, I want to conclude. Thank you.
Thank you again. And again, because we don't want to lose this thought process, we may want to invite now the techie he spoke about cyber security, then the issue of technology and data. Then we have the data commissioner. I think it's fair to now bring in a man who can bring all this together, and that is the chief data officer of ABSA.
Thank you so much, Daktari. And why I'm happy to actually be part of this panel today is because the topics and the presentations covered today bring together two aspects of my life. Now, as the Chief Data Officer at ABSA, I look after the 10 markets that ABSA is operating in, and I look after 4 key specialties. Number 1 is analytics and business intelligence. Number 2 is data management and privacy. Number 3 is artificial intelligence and data science. And number 4 is modern analytics. And just to summarize those areas, one side is actually the offensive use of data. How can we use data to create more value to the organization? But the other side of the coin is actually how do we protect our data assets? How do we ensure that we have the right kind of guardrails on how we are using data? I've liked the 2 presentations because they covered very critical aspects of what is happening within the business and the insurance sector. Because of the macros, these industries are being disrupted. And we may be all sitting here as executives and speaking on how we are keeping it together, but we know right now that the market is tough. If you look at innovation, which was covered very well in the last presentation, I can actually predict that in the insurance sector, most of your innovations will come from data. Actually, more than 70%. And I can give you examples. Understanding your customers better, pricing and profitability. We have been speaking about loss rates for specific, particular sectors, particular customers going up. How are you able to come up with new pricing methodologies? Data. Fraud. Understanding how to predict fraudulent claims. Understanding gaps in products and how they are set up. Data. Understanding how you can actually target and segment your customers. Creation of new products within the insurance sector. Data. So innovation is very pertinent, and I'm happy that it was brought out very keenly that you have to ensure not only do you have a sandbox, but you are actually able to use data to innovate. Now, I wanted to ask how many people have a test budget in the organization. This is some money put aside, and you can actually lose it when you're actually experimenting. How many people have? No hands, yeah? In the banking sector, we actually allow people to lose money when they are experimenting. It's called test and learn. You test, innovate, make mistakes, learn. As long as you do not breach the limit you have given you. And guess what? Out of all the tests that have been done, more than 30% of them make it to new products and propositions. The second aspect is about how do we have the right kind of guardrails in how we use data within the organization. I think the privacy acts are very clear and particular. The role of the DPO is very clear. But have you thought about how you make it a reality, that people live and understand how to protect and use data in the organization? It doesn't stop with the DPO. Some people feel that when you just register for the certificate and you hire, you're done. You have to have data owners and stewards sitting in different parts of the businesses looking at the data. You have to run frequent quality checks. You have to identify system gaps that prevent proper use of data. It is not about really placing the policies in the organization, but also implementing them. From my previous life in the audit world, we had 3 ways of checking how policies are implemented. Number 1 is test of design. Have you designed the right policy based on the frameworks and the acts? Number 2 is test of implementation. Do you implement it? And the last one is test of operational effectiveness. Is it effective to you? So I know data is a new field. Fortunately or unfortunately, I was the first chief data officer in the region, East Africa, and I'm actually an evangelist when it comes to data. Reach out to myself, let's connect, let's talk about data, but I know that this is actually a critical tool. Offensively, to create value and innovate, but also defensively, to ensure that we don't step on the DPC's red wires. Thank you.
Thank you, Mr. Dungi. And we can agree there is now a need to hear from a policymaker, especially on how now to harmonize cross-border regulation. From the insurance perspective, from data perspective, I think there is out of an uniform terrain in the regulation. Okay? And this is because some entities, some jurisdictions are ahead of others. But we have now the policy issue. How do we harmonize? How do we do what the regulator was saying, that when you go to Uganda, he may want to recognize that you are partially regulated in Kenya. Okay? Data-wise, how do we now have that convergence between Kenyan Data Commissioner, Ugandan Data Commissioner, and others? So let us kindly invite now the DG, Mr. My friend Mwenda, to give a comment on how you harmonize cross-border regulation. Welcome.
Thank you, Daktari. And I write on the protocols already established. And quickly, and I was wondering why you skipped me, but now I see why. And it's because, in my own thinking, if you look at the, and I will speak about three things. One is, and it's been talked about, the role of policy and regulation. Because all these things that we are talking about have to be anchored somewhere in policy and regulation. And if we get it right, then we can count on a better result. I also, and my boss spoke about the role of this sector in growth, employment, etc. And growth has two components. There is a domestic driven growth, the growth driven by the domestic, through the domestic market, but there is also increasingly growth potential when you look at the potential when you cross the border. And then the third issue is social welfare, and I will try and do it quickly. But the first point to note is that there are many emerging risks that have been highlighted here. I was taking notes. There is the issue of money laundering and terrorism financing. It's a new and current problem growing. We have issues of climate change. We have cyber threat or crime. We have extreme events like the Russia-Ukraine. We think it is too far, but it has risks coming to us. We have had pandemics, and we also have risks arising from just the international financial markets. And there could also be risks arising from policy change, not just in our country, but also beyond the borders. And in terms of policy should then seek to respond to some of these concerns. For example, when you look at even sovereign states, increasingly, we are having budgets disrupted. You can even see that every year we are having additional budgets or supplementaries to upwards of 0.2% of GDP. That points to a fiscal risk. And whenever you have such fiscal risks, it means that also sovereigns are rated as risky borrowers. So what am I saying? That there is a role, say, for the insurance sector to also facilitate sovereigns in times of such great risks to access the international financial markets through products like the risk sovereigns, but also it can also be said for private players. I think how we respond to those, it's a role squarely within the insurance industry. And policy must then facilitate. Policy must facilitate innovation in that regard. Issues of enforcement to ensure that we deal with issues of money laundering and terrorism financing, because if we do not, the exposure to the country is such that we may not be able, as private sector players or even sovereigns, to access financing in the international markets because we are rated as risky. Now, and there is a lot that we can say, but I am just giving that as an illustration. When it comes to growth, we have, it was said here in the morning that banks have moved to, like Kenyan banks have moved to other neighboring countries to provide services. For those banks to thrive, they will also need to interact with the insurance industry. Some of the products they provide will become attractive if they are supplemented by products that are provided by the insurance industry. So, in essence, we must begin thinking of beyond the boundaries of Kenya, and to say, how does then policy respond to regional integration in the context of the insurance industry? For example, de-risking is a tool that can be provided beyond Kenya, but more importantly, we must then standardize for the players in Kenya to be accepted in Uganda or in Tanzania. Policy must set standards for professions, for the players, if it's brokers, so that when the regulator in Uganda is assessing them, he knows the platform that has been set in that country. And then it is possible, and it gives confidence to those who are trading. Now, finally, and the third is not, I'm just picking the key ones. I think we have spoken here about compliance issues, issues that affect the insured, including businesses, and ultimately, if insurance does not deliver value, and value means that that document, the cover given, must count always for something. Otherwise, there is a risk to social welfare. And we must then, for example, you can imagine if you are if you fall sick and you had a health cover and you are unable to access health services, then you affect the social well-being. So increasingly, therefore, also matters of social welfare are linked to what we have even provided in our Constitution as rights to citizens. So policy must respond to such issues. And I think there are many others, but I think from listening, I thought I should emphasize some of these issues. I thank you.
So again, thank you so much. We can clap again for our panelists. So we seem to be learning a lot from you. Again, maybe because my bosses are here, I can request to be given a test budget. You make mistakes and you don't get issues with the board. But that's a very good contribution. And also the issue of cybersecurity. I'm sure some of us are offering cyber risk covers, and that also contributes a lot to data privacy. And we wish to confirm that apart from the regular phishing, in Kenya we use know before tools, so we are able to assess our knowledge, cyber awareness on weekly basis. And of course, we have taken a cyber risk cover. But again, the weakest point is always human. We are also learning a lot from the auditors, especially on the solvency. I'm sure when you look at it from a CEO level, maybe your finance people came to you after complying with IFRS 17. There's a way the regulatory and the sovereign capital behaved before and after IFRS 17 compliance. Okay? So some people actually fell below, and woe unto you if you are in Uganda. Okay? Okay? So again, being aware of what is coming and how it is going to affect your business is very key. Because if, for instance, you are needed to call your capital soonest to comply with a standard, I think it's good to be proactive. We are also talking about innovation, which we are taking very seriously, and also the issue of compliance culture. That also came up. And we can agree, if we are to put our mindset together and influence policy from government and the regulatory point of view, we can see how now our topic of today contributes and affects or facilitates our business. And with those few remarks, let us call it a session. Okay. Again, we had a spillover to lunch hour, but I'm sure you're not that hungry because you took late breakfast. So we would want to release you, and we may want to agree that because of time, we may want to reduce our lunch break from 1 hour to half an hour. We can agree on that, okay? So that we can finish at 4:30 as earlier planned. So thank you so much. Enjoy your lunch.
Thank you so much. So I'm just going to request our panelists, maybe we just stand there for one group photo before they leave. So our panelists, if you can line up, we take a picture together, and then we can be able to leave. And also,
so
I know we've got some gifts that you're going
there
to
we are, almost breaking for lunch right here at the Kenya CEO Summit 2024. We've just completed the first panel, which has been very deep and very detailed. It was a panel that was very heavy, comprising, and it was tackling actually the issue of policy and regulatory considerations for growth and sustainability in the insurance sector. Quite a number of issues have been brought up in regards to regulation. One of them has been cross-border regulation, where harmonizing standards for cohesive global insurance market came in strong. At the same time, we've had the issue of risk-based approach on a myriad of issues in that regard. Other than that, we've seen quite a number of issues coming up strongly. One of them, of course, being preparedness of the insurance sector to a changing world, a world that is very sensitive and very key on matters of sustainability. How does the sector actually withstand all that? And also, they've had a discussion touching on ensuring financial stability for a greener future. So essentially what is going on and what has been handled in the first session is bringing to light the key influences when it comes to the sector, and that is policy and regulatory consideration. Remember that we have, these are the leaders of the insurance sector, and when you talk about forging a way forward, of course in line with the theme of sustainable growth for global for the global insurance sector, it comes in very handy to see that there is a certain level of consensus in regards to, first of all, the approach of Pan-Africanism with our insurance. How can you make sure that there is cross-border collaboration, making sure that as we develop as a continent, we are growing as one, taking advantage and leveraging on the different tools that have been availed to the sector, of course, including matters to do with technology, where we've had a charter on matters InsurTech, which has been very, very critical, being an avenue vehicle to carry the insurance sector onto the next level that needs to be handled. Of course, the sector has been called upon to step up and face, or rather mitigate risks for the economy, because there are emerging challenges that we've seen issues to do with climate change, which has been a huge challenge, cyber security, which is also another huge challenge, tackling fraud in the sector. And the sector has been encouraged to adopt technology and leverage on it to not only push product but also to protect itself. It is defending while attacking. It gives you that opportunity to be able to achieve that. But sustainability is at the core of this meeting, of this summit, just making sure that the sector is developing in a manner that is sustainable, that is adding value, that is making the world greener, that is making the world a better place. And also another issue that has been brought up from that particular panel, we've seen our data commissioner, that is Ms. Kasait, on matters data privacy and compliance in the insurtech era. Remember, information is power right now. Data is king. Data is the new oil. So when you are going to, or when you're pushing insurance, selling insurance, there is a heavy collection of data. I mean, it is an industry that information is critical before making a decision. Essentially, you're taking on risk. So data is king, and we've realized that it brings in another conundrum on matters data privacy and how to tackle data. And that's why we had that discussion with the data commissioner of Kenya, saying there is, as much as there is regulation within the country, there is need to do away with the barriers, and that brings across the issue of cross-border collaboration, where you don't have to adhere to a different set of regulation when you move to Uganda or Tanzania. It removes the smoothness that needs to be there. So there needs to be sort of alignment. And this, of course, we already have established a framework under the Africa Continental Free Trade area, where it is easier to regularize, solutions across the continent. But that is the first half of the CEO Summit 2024, courtesy of Kenya Re, and that's where we are right now. Remember, the theme is sustainable growth for the global insurance industry, which is very, very important, a timely discussion, leveraging on all fronts to make sure that each and every sector is playing its role for a better future, not only for Kenya, but the continent of Africa and the globe at large. And the insurance sector is really at the heart of this growth and this transformation that we would like to see in the world moving forward. At this particular moment, people are breaking for lunch, so shall we, and thereafter still other sessions coming up in the afternoon, but this is going on today and tomorrow. It will be an interesting way to see how this pans out, but so far interesting, riveting discussions on matters to do with sustainable growth for global insurance industry. Now we also break, and we see what we have thereafter. But for now, we're out. No keep boy. Bye-bye.